What's up, everyone? It's Karthik with MoneyVest. So markets are starting to rotate back down intraday. So we are seeing some selling pressure here intraday as the NASDAQ and the S&P 500 are now negative on the day here. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. This is going to be a super important update because I do believe that this sell-off is not yet over because we're still within the context of a potential downtrend, and Wall Street is not stupid. They know exactly what they're doing right now as we speak, because Mag 7 is very much in a correction, and we do understand that the S&P 500 is in a bit of a dip, and the NASDAQ is in a pullback as well. So they obviously know what they're doing. If you want access to my 37 stocks and ETF, my entire watch list and shopping list, link's going to be down below. And also you can access the MoneyVest platform. There is a 51% discount available until the end of this month. So 2 more days left. If you want to take advantage of that, all these earnings are coming up. Of course, McDonald's reported on semiconductor reported pre-market. Very, very strong numbers. You can take a look at the entire earnings calendar and also do your full fundamental analysis on individual stocks as well. Coming over to the market, so if you take a look at the indices, we are starting to see a little bit of a pullback intraday. So we were green at the beginning of the day, and right now all 3 indices are once again starting to roll over a little bit. Dow Jones just a little bit over 40,400, S&P just over 5450, and the NASDAQ here down about 15 basis points, just over 17,300 as well. So the idea for today's video is that Wall Street is not stupid. And the reason I say this is because they know exactly what they're trying to do when they are pushing the markets lower. Of course, there's been a mass exodus in liquidity out of Magnificent 7 over to other parts of the market. In my previous video, I explained to you guys that this is a big discrepancy between Wall Street and Main Street, because retail investors like you and I, we may have a very long time horizon, right? So we're talking 3, 5, 7, 10 years out. And we may not care about short-term volatility or short-term performance, but Wall Street very much does, right? Because hedge funds, institutional funds, they're trying to beat the S&P 500, and they don't want to invest in something that does not perform in the short to medium term. And I'm talking the next few quarters. If they feel that they've squeezed everything potentially out of Magnificent 7 and technology, they're going to move into something else where they feel that it's just ripe for a potential rebound. And that's why they're starting to sell Magnificent 7, and they're starting to sell technology, of course, and they're moving into other parts of the market. But that does not mean that Magnificent 7 and technology is a bad trade, because what they're trying to also do is make stocks cheaper for themselves to buy back in. So they're also trying to shake out a lot of the weak hands, people that were entering in last and are going to be the first ones to get out of fear, out of just red markets that they're seeing, just red across the board, stocks selling off because there's been a significant amount of liquidity that has flooded out of these technology names over the last week and a half. If you take a look at some of the more individual stocks and how they have really sold off, so this right here is Apple, down over $300 billion in the last week and a half, down over 8.75%. And if you feel that this is going to very quickly rebound back to all-time highs, there's going to be automatically, magically $300 billion coming back in, then I'm sorry, you're mistaken. It takes time. It's not that easy to, once again, plug in over $300 billion worth of liquidity into a company that easily, right? It's just not feasible for hedge funds, institutions to make such a big decision to take $1.6 trillion out in terms of liquidity and then inject it back once prices are lower. It takes time. There's a whole process for it. This right here is Amazon, down over $100 billion in market cap in the last week and a half here, down almost 10%. This right here, Nvidia, which is down the most because it's down almost 20% from its all-time highs, and it's down over $600 billion, twice as much as that of Apple here in terms of how much it's lost in terms of market cap. At one point, it was at well over $3.3 trillion, and right now it's sitting at just over $2.7 trillion here. So significant selling pressure here across the board for Nvidia. Google down $300 billion here in terms of market cap, down 12% from its all-time highs. And we've got Microsoft, $350 billion, down over 9% from its all-time highs. Tesla, down over $120 billion, down over 15%. And I believe Meta is also down about $100 billion from its all-time highs recently as well. Now, if you really think about it logically, right, I want to put aside everything related to economics and data and everything. Just think about what has happened since July 11th up until now. Today is July 29th. And this sell-off essentially started, let's say, on the July 8th, July 9th, July 10th. 8th, 9th, 10th, around that time, right? This is when the sell-off started. What has really happened, right? If you think about it logically, what exactly took place that resulted in this selling pressure from hedge funds, institutions, for more specifically for Magnificent Seven and technology? And I bet you can't really pin down there's one catalyst or anything that resulted in this selling pressure that was worth over $1.6 trillion for Magnificent Seven. There was nothing really that could be the reason why there could be such massive amounts of selling for Magnificent Seven. You know, one of the highest records in terms of the liquidation that we've seen from Magnificent Seven and from technology stocks. Nothing really, right? So bottom line is this is simply a rotation that we have seen out of technology over other parts of the market. And hedge funds, really what they're doing is they're using every trick in the book to try to manipulate and really it's just targeted towards retail investors to try to get them to sell, to get the prices even lower, and so that they can actually start scooping back shares in. Because at the end of the day, technology is, in my opinion, where it's at, where the returns are. I mean, you are not going to see Russell 2000, right, generate the type of returns that we've seen from Magnificent Seven and technology. Yes, there's potential. Yes, there's opportunities. But at the end of the day, like utilities, defensives, industrials, I mean, those are sectors that are great from a more value perspective, but those are not the sectors that you want to be in if you're looking for growth, if you're looking for returns, if you're looking for a long-term alpha when it comes to proper actual returns, as what we've seen from technology. Those are not the sectors that are going to give you that. So this is quite literally just a rinse and repeat process as we witnessed from Wall Street over and over and over again. And this right here, I think, is a very good breakdown of what they try to do. Is like you'll notice that what we have seen though is a lot of downgrades and price cuts come out over the last couple of weeks here. There's also been some heavy shorts against Magnificent Seven, so some of the best, highest quality companies in the world. In fact, NVIDIA has also been one of the higher short interest companies among Magnificent Seven. So there's also been heavy short interest. There's also been some creating some selling pressure, shaking out the weekends, as I mentioned earlier, because it's retail investors are the ones that actually do get scared very, very quickly because markets are selling off. And if you see your portfolio down 15, 20, 30%, you know, your rational self is going to tell you, oh my God, everything's selling off, like the sky's falling apart, I need to get out of the market, I need to sell, I need to buy back at a lower price. And that's what they're trying to do, right? That's exactly the whole idea behind creating this selling momentum to the downside, is shaking out the weekends and also at the same time triggering margin calls for everyone who's been trading on leverage, taking on margin. That's one of the ways that they take their positions out and they force people out of their positions, is by triggering margin calls, by obviously dropping prices lower. As a result, margin requirements increase from brokerages, and at the end of the day, if they are forced out of that trade, then that creates even more selling pressure, right? So it's kind of like a way to rinse all the leverage out from the system, right? When the markets are selling off, it's one of the best ways to rinse a lot of that leverage out of the system, because everybody who's trading on margin, on leverage, is going to get forced out of that trade, resulting in lower prices. And then people who are actually investing with cash, with actual long-term thesis, can start scooping up shares at discounted prices. And it's one of the best ways to rinse leverage out of the system, especially over leverage out of that system. And it also triggers any type of stop losses, so takes traders out if you've got stop losses. And also at the same time, what they like to do is, of course, sell options. And that's one of the things that I've mentioned this over and over again. I teach this in my course also, that institutional investors, hedge funds, they mostly sell options. They're not looking to buy options, because buying options is a loser's strategy, unless, of course, you're in the top 5%, 1% that know exactly how to time the market, how to pick strikes, how to precisely buy options, calls, and puts at the right times. But very, very, very few people are able to do that consistently, right? The word is consistency, right? You could be right buying a call or a put. Heck, even Wall Street Bets people are right once every now and then when they're buying options, but it's very difficult to do that consistently over and over again. But selling options is by far the most consistently successful strategies. That's exactly what I teach in my course. But the idea here is when you're selling options, you're kind of guaranteed to receive a premium, right? And that's what institutions do, is when they sell you a put, right? Retail investors will be like, you know what, if the stock price continues to sell off, let me just go ahead and buy a put. It's cheap. It's a gamble. Let's see if it works out. If it works out, great. If it doesn't work out, the retail investors kind of throws his hands in the air and it's like, okay, better luck next time. But the institutional investor that sold them the put makes the money regardless. And the best part is, if that put is in the money, they get to buy the shares at even a cheaper price, because that was the whole idea all along the way. Because at the end of the day, in my opinion at least, most people want to be in technology. Most people want to be in these sectors, in these stocks here for the long term. It's just finding the right pricing, because everything depends on pricing. Always remember that your future returns depend on the price paid. The price paid will determine your future return. If you buy an excellent asset at an overpriced level, you're not going to make any money. But even if you buy a terrible asset but a fantastic price paid, you may just end up making money, right? So price paid determines your future returns. And that's the whole idea. When prices are coming down, it's always, in my opinion, a time to start deploying capital and not really be selling, right? That's what institutions want you to do. They want you to sell stock, but instead it's quite opposite. It's when you actually start buying. And one of the best ways to avoid forced selling is to minimize your utilization of leverage. If you're not using margin, if you're not using leverage, I think that's one of the best things you can do. I've never used leverage in my life. The only time I would ever use margin is if literally I feel like the opportunities are too good to pass up and I'm running out of cash. I've literally deployed every last dollar into the market and I need more money because the risk rewards are just too good. And that has only really happened once. That was back in the pandemic. But since then, it hasn't really given us a 40-50% sell-off. And I hope that doesn't happen, because that would lead to a very catastrophic event. But if it does, at least we'll be ready to take advantage of those opportunities. So just be calm, be patient, trust the process. Don't get don't get manipulated by all these games that Wall Street's playing. I do believe there might be a little bit more selling pressure, considering intraday we are seeing some selling pressure. And if you come take a look at the 30-minute time frame charts that I mentioned earlier in my previous videos, we're still within the context of a downtrend, right? So we're still within the context of a lower high and a lower low. So this right here is the downtrend, lower highs and lower lows. So until we get a breakout above, let's say 467, 468, I believe we're still going to be in a bit of a downtrend, showing weakness for the markets. This right here is going to be QQQs and SPY, also in a very similar pattern, as you can see, lower highs and lower lows as presented here in the S&P 500. So keep a close eye on this entire pattern. We're still showing signs of weakness. I'll keep you guys posted with where we are, and we'll continue to dollar cost average and take a look at the volatility here, up over 4.8, almost 5% on the day, and the Money Invest Index will update once the markets close. So let me know your thoughts down in the comment section below. As always, make sure that you drop a like, subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. 51% discount available until the end of this month. As always, happy investing. I'll see you all in the next video.